that sound means we are now live here on our halftime report, Tackle Trading's daily show, where we go through the market news, the information, the action, break it all down, try to give you guys some analysis out there as to what is happening so you can better run your daily routine as we're running our daily routine. Welcome, welcome, welcome. Monday morning, 11/9/2020, and the markets are up big here to start the week. Positive vaccine trial news out of Pfizer and BNTX about their efficacy of their coronavirus vaccine, and basically coming in at 90%. Some of the data there, very, very encouraging. Market took off on that. It was already up pretty big heading into the open here today as well, just on positivity kind of carrying through from last week. Last week was the biggest bullish week in an election week since 1932. We're starting the week out on a very bullish note. Got the regular crew here today. We've got Matt doing analysis, Mark doing analysis. I'm here as your host, Coach Tim Justice. Hashtag Team Tackle in the chat, and let's get right down to business. Matty, how you doing today on a Monday morning?
I'm doing good, Tim. Excited to be here.
And Marky, what about you, sir? Markets are up here today. How are you approaching these markets, and how you doing?
I'm doing good. Listen, I had a relaxing weekend. Watching, when I woke up, like 6 o'clock this morning and looked at this Mountain Standard Time and looked at the futures, and it was so curious because I scanned through my things and I was like, S&P up big, and I was like, wow, and then I looked at the NASDAQ and it wasn't. It was almost like dojing, and I was like, huh. And I mean, the first thought that came to my mind was, what would cause that? And the only thing I could think of was COVID. And that divergence. I mean, because you don't see that very often, where NASDAQ is dojing and the S&P is up 3% or 4%, what it was earlier this morning. That doesn't happen every day. It was very unusual. And so it's 2020, right? We're used to the unusual in 2020.
Definitely used to the unusual this year. There's no question about it. We've had quite a few different themes rotating in and out. One of the current themes right now, Matt, is post-election analysis and what's happening from a chart perspective. Huge rally last week. We broke this down day by day by day. Now we're coming into Monday morning. Markets are breaking out here today. We'll get to the Pfizer news here in just a second. What's your read currently just on the broad sentiment right now? Huge bullish movement in general. What's your take on that?
I mean, like we talked about last week, obviously this market wants to buy. It wanted to buy before the vaccine news was released last night. I mean, when you're looking at this market, and obviously we did have some news over the weekend that the election was called for Vice President Biden, President-elect Biden. He's putting in some of his, wants, coronavirus type task force here today, and that's going to be interesting. But the market, when you look at this from a technical perspective, let's just look at the market intraday. Here's the futures market open last night, gap up, run. You see the market wanting to buy here. And, I was looking at the market last night and I'm thinking to myself, coming back to the daily chart very quickly, the market's really kind of right here on the futures, on the overnight action, right into this range. You're breaking out of that pivot point that we saw here last, right mid-October, October 12th. You're kind of hovering against that pivot point right there at 35.75, 35.87 is the high price there. And you were looking at a scenario where the market bought up coming into the futures market, traded up on the overnight action throughout the Japanese Open, the Chinese, the European markets. And then right here, very early in the East, 6:30 Eastern time, you saw that vaccine news come out, and it just up 100 points, like it was absolutely nothing. I mean, you're looking at this on a 5-minute chart, and you can kind of see that move and just the depth of that move. I mean, that's 100-point movement in a very, very, very short time frame. And this is at 4:30 in the morning Mountain Standard Time, 6:30 in the morning in the East. Nobody's really looking at that. That's all algorithm-based vaccine headline news is basically what that is. And then we all woke up to a market. I went to bed in a market environment that I felt was going to be very, very positive coming into the cash open, that, I felt good about a lot of our scatter reports. And then, after the vaccine news was announced by Pfizer and some very, very positive vaccine news, I mean, this does feel like a vaccine news day to a certain extent. I want to get Mark's take on that. But, in terms of that open, all of a sudden now, you're looking at the S&P 500 on the ETF now, and now you see what happened. It was right here hovering against that, gapped up above everything. And I think with the gap up, it did throw a little bit of a wrench into the technical scenario here, where you're looking at a marketplace that the technical analysis kind of got blown up a little bit in the short term. We need to be a little patient, let that reestablish itself, and that can take a couple days here. I'll get my dog hit my camera, so we'll see if that can not happen again there, Rosie. But no, it happened again there. See, this is why I should just take off the stupid video. Stinking dogs.
No, she's all right. I mean, Rosie's doing her thing, but go ahead.
She's being needy is what she's being. But in terms of this, I feel like the gap is obviously, long-term investors are celebrating today, and they've been celebrating over the last 4 or 5 days in the marketplace. But from a short-term perspective, and I know this is weird to think about, but I do think the gap up really annoyed a lot of short-term traders from the bullish and the bearish perspective. I felt like there were some really good charts coming into the week, and I felt like, obviously there was a bullish, mentality out there in the market. We talked last week about the themes that are emerging in the marketplace, and we did a lot of detailed analysis on that. We'll have more detailed analysis on that moving on into the future as well. But the market wanted to buy. Just the short-term read is that gapping situation just blew up a lot of technical analysis. It was this grenade, Pfizer. And again, I think like a lot of people, the Pfizer news very, very positive. I'm just, from a trader perspective, I'm like, you're gonna do this like at 9:35, like 6:30 in the morning had to be the time you made this announcement. You couldn't wait for us to get some nice little bullish trades in there to not have gap up above all contingent orders or buy stop limit orders in the stock market. So obviously, I think the world today is celebrating a little bit. We've seen market highs in a lot of markets around the world. Europe was positive. Asia was positive, in that capacity. So there's my dog right there saying hi. But for the most part, I just think the short-term technicals kind of blew that up a little bit. All right, we got to figure this out, Rosie. Get down.
To get an example of that, Matt, look at Planet Fitness here this morning. One of the targets I had for myself, I wanted to trade it coming into a Monday morning. It was on our report over the weekend. We talked about it, I think, even in the halftime report, a little triple top breakout. But the news, this kind of stock, this reopening type of stock, cruise lines and theaters and all these types, they just all gapped out and it blew up the short-term chart. It doesn't change the fact I'm interested in PLNT, but now I just can't approach it from a swing trade perspective the same way I was going to do on a Monday morning. I think a lot of traders out there are dealing with the same thing.
Swing traders are looking at this market today and they're like, I think they're feeling a lot of what I'm feeling today. They're looking at this market and they're saying, wow, all right, so you finally give us a nice little breakout, couple consolidation candles, and then you just decide to gap up 8%. Really? That's how it works. So I think swing traders are a little frustrated here today, just given the fact that this positive movement we've seen in the market kind of blew up a lot of those short-term technicals. You got to kind of wait and be patient, let them reestablish themselves to a certain degree. But I think the biggest takeaway I have is those long-term accounts, those 401ks, IRAs, those long-term investments. I think that you've removed any caution in the short term because of COVID.
Yeah,
and the election, obviously. And I said this last week, the further we get into the rearview mirror there, more likely we'll be focused on more positive things in the future.
Well, I don't have an answer for this yet. One of the questions I've been having in my head this morning has been about the long-term analysis as well, in terms of economic recovery, what it means for 2021, how these economists are going to have their projections coming out. Matt, I mean, you've always believed we're going to have a vaccine. You've talked about that, and a successful vaccine at some point in 2021. This news out of Pfizer, which we'll get here in just a minute, it is now just an extenuation of that conversation we've been having with that for quite some time. We've had positive vaccine movement, and now this is big.
And Pfizer's news today is very positive, and we as a collective community, not just investors, but as a society, we should be fairly happy about this. Obviously, nothing, and I said this before, I'll say it again, nothing today changed my longer term viewpoint of that. I've always felt we were going to have a vaccine in 2021. The news that this isn't the first time we've had positive vaccine news in the last 3 months, guys. The market just wasn't focused on it. But I do believe there is something going on in the undercurrent of the market right now, and some of that is based on the philosophies of economics, COVID, politics, kind of all round together. But you take, and I said this last week in the halftime report, I said, guys, listen, the United States is not going to shut down again. They're not going to shut down economically again. And that has to, when you're projecting out economics, you have to, you have to answer that question. If you can't answer that question on whether or not you feel you have economic shutdowns in forward looking, then it's going to be a very, very difficult thing to give an economic analysis on projections. It's going to be a very difficult thing to give, guidance at the company level or whatever the case might be. It's difficult for the central bank, who is chock full of a bunch of economists, to come out there and say, well, this is exactly where we feel GDP is going to be, and we feel this is where the labor market's going to be, and we feel this is where inflation is going to be, and with this where we feel manufacturing is going to be based on these key metrics. And one of those, one of the monkey wrenches in the whole thing was, well, what about COVID? Well, I do think what the state of Utah did last night, specifically late last night, when they made the emergency declaration that I'm sure Mark and Tim, you guys got as well. I think that is very telling to the market of how some of these states that have been very resistant to COVID lockdowns or mask mandates or whatever the case might be. Look at what the state of Utah did just last night. A statewide mask mandate, the largest restrictions from a COVID perspective that you've seen in any state so far, outside of just the very, very aggressive shutdowns we had in certain locations, i.e. New York as an example there in March and April of this year. But what did they not do, right? Is social distancing? You want to talk about social distancing? Hey, you can social distance with the people you live with. That's about it in the state of Utah right now. But they also said, you know what, we're not going to shut down any businesses. The eateries are going to be open. You can go to your gym. You can live your life, right? You just have to do it more cautious. You have to do it wearing a mask, obviously. And so I think you're starting to see, and I think this will start leading into some of the degree of economic analysis as these states start to put in these restrictions from an economic perspective. One thing to keep in mind is they're not shutting down businesses. They are putting some very strict guidelines in place, and ones that, we in the state of Utah, maybe nationally this has been a big deal, but in the state of Utah, we're going to follow the law. We're going to follow whatever that happens. Republican, Democrat, Independent, red, green, white, yellow, doesn't matter what party. We're going to follow that. That's the state of Utah. So it is interesting to me to see a very, very conservative state in Utah, one of the most conservative states in the union in Utah, put out some of the more restrictive guidelines in the union, and yet still keep all businesses open and up. And that's what I was talking about last week, is that we're not going to shut down. I've never believed under a Biden presidency we're going to shut down the economy. I think the analysis is leading to we're going to aggressively attack the virus while figuring out how to safely open up the economy. And I do think you got to give President Trump, a tremendous amount of credit right now on how much he has pushed some of these pharmaceutical companies in the vaccine, both in terms of national investment and pressure. And so I think we as Americans should celebrate a little bit today the fact that we do have, and it's not game over yet. The vaccine still got months and months in front of us, but I'm taking this vaccine news as very, very positive. I'm also coupling that a little bit with what the state of Utah did on the overnight action, still opening up, putting in some very strict restrictions. So I think there's a little bit of analysis in the market right now, quite frankly, that we're going to continue to open up the economy, whether under a Biden presidency. We're going to continue to open the economy. We're going to continue to work on a vaccine, which is slated to be, we're talking 50 million usages in 2020, most likely for military and, people in hospitals and whatnot. But we're talking 1.3 billion doses next year, guys. And we're talking 90% effective, 90%. with right now at max only 8 out of 64 people cause some degree of symptoms. I mean, this is positive news. This is positive news. You couple that with what the state of Utah did, you could really start to see themes developing over the bullish mentality of the marketplace.
Bring up Pfizer if you can for a bit, and let's kind of talk about that stock and specifically what has happened with this vaccine. I think you've hit some of the major points. That 90% effective rate, Matt, that was the headline across all different financial medias as I was reading the news. It was what health experts cited. I think that they were looking for somewhere north of 75. Even Dr. Fauci has come out and said, as long as it's 50 to 60% effective, we're probably going to release this through the FDA. So at 90%, if this data is consistent as they continue to examine the data, that's obviously a big boon. They're looking for emergency approval here by the end of the month. Go ahead.
Well, yeah, and that's why I think, I mean, this news is very, very positive, guys. I mean, just as a human being for a second, let's take a step back and remove the political goggles for a second and just think about the year we've had in 2020. Obviously, a year we will all remember throughout our entire lifetime. So let's just celebrate this positive news for just a second. But this to me is more than just a vaccine day. When you're looking at this from an economic perspective, Tim, last week we were talking about the market going up and up and up, and we were talking about that post, presidential, put it in the rear view mirror, the market just celebrating a path moving forward. But one of the things I said last week was, I said, guys, this is obviously positive for the market, and the market is certainly adopting some themes, but this isn't about the economy. If this was about the economy, you would see energy move. To me today, and it's a crazy wild day, and it's going to be a crazy wild week. It just is. But the reality is, when you look at these sectors out there, and you're looking at energy right now, and you're saying, okay, what does this day represent, right? Is this just a vaccine news day? Is this the economy reopening up play? What does this represent? I think this is fairly substantial from an economic reopening up theme. Goldman Sachs, and I'm going to stop short of what Goldman Sachs thought, but I do think they're in the right train of thought here. They're looking at V-shaped economic recoveries now moving forward. And quite frankly, one of the reasons why I always stopped short of calling a V-shaped recovery, and most felt we were going to U-shaped recovery, and I still believe that most likely we're going to see a U-shaped recovery, especially in the labor market. But Goldman Sachs talked today about a V-shaped economic recovery today, and a lot of that is predicated on what I just talked about. Continuing to open up the economy, continuing to work on a vaccine, and the Pfizer news today, obviously, just embraces that philosophy of the economy reopening up play here. But now what are you seeing? You're seeing those depressed areas of the market today. This isn't led by the top of the market here today. What this is being led by today is the bottom of the market. Your cruise lines up big today, airlines up big today, infrastructure's up big today, energy. Energy is the one thing that really, to me, stands out in this analysis, because energy has been held back so long, so bad. It's just been a depressed area of the market. Post-COVID, pre-COVID was depressed area of the market. Has really never had its day in the sun, all the way back for about 5-6 years now. But energy up, the market's up 2-3% today. The energy sector, it's up 15% here today, guys. I think that's very telling. Can it last? That's an open question. But I do think it's very telling on really kind of the underneath area of the market, really what's driving this. And I think you are looking at this as a virus day, no doubt. But this has positive V-shaped economic recovery type scenarios in 2021. And that's why you're seeing energy move a little bit more than, not a little bit more of the market. It is absolutely destroying the market here today.
Mark, we are seeing split movements out of different types of companies. Obviously, the energy stocks and the reopening stocks, the Planet Fitnesses, the cruise lines, the airlines, like Matt has been talking about, are all popping. Is that just algo-driven stuff for you, Mark? Is it a genuinely that type of move that can be sustained, or do you think this is kind of just the reaction as the market got the news and just instantly went towards certain kinds of companies? Like, what's your read on this price action today?
We're having a historic rotation day. I mean, these days do not happen very often. Now, I mean, the big $1 million question isn't what is happening.
Is that just algo?
Because, I mean, we know what's happening. We can see it on the chart. Is it sustainable? And when I look at this, because I mean, we had this, I mean, go back to early June, and we had the, hey, economy's reopening, remember? And that's when Boeing blew off the top and American Airlines blew off the top. And you had this kind of move. Now, it was over a 2-3 day period, right? It wasn't all at one day trying to get it all at once. And we saw that, and then it reversed course. It wasn't sustainable. I mean, the $1 million question right now, as we look at this, is, does this news, because we have a lot of negative COVID news ahead of us, we're heading into winter, we know the virus gets bad, we know, we can speculate what kind of stimulus money will be available directly to company. I'm not talking about broad measures, I'm talking about specific industry target stimulus. We know that life is not going to return to normal for these epicenter industries anytime soon. So is this the type of event that can create a sustainable, life is going to be better, maybe in March, maybe in June, maybe in September down the road? Can it be sustainable in the face of what is going to be a lot of negative COVID data over the next few months? That's the $1 million question. I question whether it is. The one thing I think I believe for sure is that if these epicenter stocks were to dip again, because right now, I mean, they're in floating technical patterns, right? It feels like it's, I mean, you look at a chart like that, that's what you see after earnings, right? And we know after earnings, things can go a lot of different directions in the short term. If epicenter stocks were to dip again back into those ranges that they experienced over the last month, I'm very, very interested in that situation. Very, very interested in that situation. But, can it sustain itself? I mean, we're going to find out, right? Can Carnival climb up to $35 here? Can the momentum take it, knowing that people aren't going to be cruising for the next little bit, knowing that the vaccine's 6 months away? I don't know.
Let's answer that question, Mark, because I know you're an investor in this area of the market, the depressed area of the market. How are you approaching this? Because I mean, how you're approaching this today tells me a lot on whether or not you believe this can actually be sustained.
Well, everyone knows that I've been like Cinemark, go to Cinemark, CNK, up 50% today. I'm taking on an individual case-by-case basis. Now, I own shares of Cinemark. I had naked puts on Cinemark. I had a classic cost average down plan. I'm taking profit on the situation because I know that, listen, there are no movies slated of big blockbusters the rest of the year. I know that in this, in January, February, we got a really light movie slate. I know COVID data is ahead. There's probably not direct stimulus money coming. And so I'm taking my profit. And if Cinemark dips down again into the 9s and 8s or 10, then I'll redo the thing based on new information. Same with cruise lines, same with casinos, same with restaurants, same with Boeing. Of all these, like when I can make money, I usually take it, especially when I don't know how the sentiment plays out in the coming weeks. So will I regret that decision? No, because I made money on it.
I don't think you ever regret locking in profit.
Yeah, I mean, that's the thing.
Right.
And so I mean, I have a hard time seeing on Friday, these stocks last week, the last 2 weeks, knowing that we're going to have a dark COVID winter, knowing that life isn't going to return to the normal in a short time. And now that we know there's a vaccine, which we already knew there would be a vaccine, that all of a sudden this is going to lift Boeing up to $300. Hey, if it does, I miss out. I made money this year on these epicenter stocks and it misses out. I'm going to be greedy, wait for a pullback, and then do the same thing I've done for the last 6-7 months.
I don't think it's greedy, Mark. I think it's pragmatic. I don't think it's
so.
greedy at all. I mean, when you're looking at, say, Cinemark, and you've been all over Cinemark. I mean, you've defended Cinemark in the face of me aggressively ripping on Cinemark. So in terms of that, I mean, you got to look at Cinemark here, and Cinemark is just an example of what we're seeing today in the airlines, cruises, those types of depressed areas of the economy reopening up, theme that just never played out earlier this year. But you're seeing Cinemark up 58% today. Well, where's it at? It's kissing the 200-day moving average for the first time in a long time. So
a long time.
I don't think you're waking up today and you're saying, oh my goodness, I've been waiting to make some money here. I got some money, let me lock in profit. I think you're being pragmatic and you're saying, you know what? If I were to get this move in 3 weeks, I would have been happy. I got it on 1 day.
I got it on 1 day.
So why don't we just lock in some profit? Let Cinemark, if this play is legit, and you've heard me say this before, and I'll say it a million times because I think it's very, 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 very helpful when you're looking at, making a decision to chase something or not. If this move in Cinemark is legit, well, it's going to hold the 200-day moving average. It could form a bullish retracement, and it could high base and break out of $15 to give you a wonderful trading signal. So
and then you short.
I think you approach it like that, quite frankly, where you're looking at Cinemark, but you can say the exact same thing on Boeing here. Boeing, a very, very popular investing stock, not a popular trading stock, but a very, very popular, blue chip type stock out there. A lot of people have been waiting for Boeing to show some life. It's showing some life here today. Is this about Boeing, or is this just something more representative to the market itself? I think those are open questions. But if you were not in Boeing at all, you wouldn't be looking to chase here. And if you weren't in Cinemark, you wouldn't be looking to chase there. You'd be looking at that and saying, you know what? Let's see how Boeing handles that 200-day moving average. We know how vital that 200-day moving average is. Look at the last time Boeing hit the 200-day moving average. Now, obviously, timing and pandemic played a significant role in this movement, but we know historically the 200-day moving average can be a significant battle zone for buyers and sellers out there. So if I'm looking at Boeing or Cinemark, or you take Delta Airlines here today, breaking above the 200-day moving average, I think every single aspect of this analysis, if you're in something like a depressed area of the market, you're celebrating, obviously, but I think you are locking in a little bit of that profit mark, especially in a lot of these areas of the market that have not been, moving the same way the market has in the last 6 months. But I think you're looking at this, and this goes into that conversation that we wanted to start last week, that we're going to be ongoing over the next month or so. Is value back? Now, this is not a value move in the market. I'm not saying that, but it is those depressed areas of the market that are those traditional value plays out there, the dividend payers out there, lower PE ratios, not growth stocks. They're moving here today. We've seen them be moving in recent history. I do have one question coming into 2021, and that's not going to be answered in the next week or so, but I think it should be on the radar of every trader out there. Does value have that comeback in it? It's been beaten up. It's seen price appreciation. I'm not saying that, but it's been beaten up by the average performance in the overall marketplace over the last 10 years. We've been waiting on that value play to come back for a long time now. You're starting to see the makings of it, and especially if that theme, and it is a hypothetical right now, but if the market starts embracing what Utah did on the overnight action with the vaccine backstop to a certain extent, and you start to really start thinking about the economy truly opening back up without those, outside of just your normal social distancing restrictions, obviously, and, wearing a mask and all that jazz. But is the economy on this, like Goldman Sachs believes, on this precipice of truly being a V-shaped economic recovery? Because guys, I've said it for a long time, but we have not seen V-shaped economic recovery. Now, we've had positive, we've had some negative, but for you to truly have that V-shaped economic recovery, you have to have the labor market, and the labor market's never going to come back unless the economy opens up completely. I'm starting to see an inkling of it with what Utah, with the vaccine here today, but it's on my radar, I can tell you that. And I think that's how you approach these stocks today. Is if you were in those epicenter stocks, you should be locking in a little bit of profit here today. Take the gift of the trading gods. There's nothing wrong with that, but you should be having them on your radar. You should be starting to adopt a value-based watch list that you work off of over the next, rotating obviously, but off of the next year or so, because these areas of the market, if they do start cooking, there's a lot of room for them to grow.
Yeah, and obviously, I mean, we talked about a lot last week, Matt, about developing those watch lists, getting ready for this. And if you came in on a Monday morning, you're ready to pull the trigger. You might have missed some of that stuff here today if you were already in. I saw some people in the chat saying, "Hey, I already picked up some Boeing or this or that." Then obviously, you've got that option, an opportunity to pull a little profit off the table here. But
Well, and if you don't want to, if you're picking it up from a long-term investment perspective, you're sitting on a gap up 200-day moving average, you write a covered call against that
yeah,
immediately.
yeah.
Immediately. Like that is like a guarantee. If that's a long-term investment, you write that covered call and you cash flow as that fights that 200-day moving average. But yeah, I think today we have more questions that are unanswered today than we did even last week. But you can start to see the analysis building, and I'm getting excited for that, quite frankly.
Back on the indexes for just a minute. Let's do a thorough technical read if we can. We've been talking broad-based about what's going on in the markets here today. Markets are up pretty big. I know this is a huge movement to the upside, Matt, but we have now hit a new all-time high on the intraday here on the S&P. Long-term charts, we're looking at potentially a breakout on this weekly chart. It is, as of right now, it looks like every inclination in the world would be that it's going to hold that. How do you read this breakout here on the weekly on the S&P?
Well, no, we're just starting the week, obviously. Let's see if it will hold. Dogs, stop. But we'll see if it actually holds or not. And my wife and my kids have a dentist appointment. That's why I have the dogs with me today. But they are right. Rosie, stop. But you know, when you're looking at it, we're trying to write a story. We don't know yet. We don't know if it's going to confirm this week or not. I believe it's going to be volatile this week. I said last week, and we'll get into Bitcoin. I said, guys, it's going to be a major battle. And if you're faint of heart, get out of it. Get out of it. Don't, if you're not ready to fight that battle. I feel like we're going to have a little bit of a battle on the market here this week. And I think we got a long way to go before we call this confirmation on a breakout.
You know, it is notable that where some of the strength is here today, Matt. Small caps are up almost 6%. You know, just running the Russell is taken off like crazy. Those U.S. dependent companies that are going to be here, the Dow Jones Industrial taken off because a lot of the Boeings and those types were the ones that were kind of held back and
Infrastructure,
whatnot.
energy,
And
banks. I mean,
and global stocks. I
yeah.
mean, emerging markets, European stocks, the Japanese market took off. The Nikkei was up 5% today. I mean, we are seeing this strength not just in reopening things in the US. It's definitely there, but it's also in global stocks. So it's broad based. It's very, very impressive, the rally. I mean, however you approach today's action in terms of whether you take the profits, add new entries, all that kind of stuff, you have to love this just from a broad based, you know, stock market theme. And it is furthering kind of some of those bullish longer term charts. So I love what I'm seeing here today,
Yeah.
obviously. I mean, you have to be when you're long the market, long delta, all that kind of stuff. Short-term management is going to throw some wrenches into it. But
All right, we got this dog keeps talking. Here's Rosie.
hey, Rosie.
It's our little dog, her Rosie. She's a whiny little sucker, aren't you, Rosie?
Yeah, she loves her daddy. Look at
No,
that
she
thing.
doesn't. She hates
Yes,
me. She
she's on your
misses her
lap.
mom.
Oh goodness. All right, let's take a look at some of the other areas of the market. I do want to get to Berkshire and McDonald's and some other companies that are in the news as well from an earnings perspective. Matt, take a look at crude oil, or you want to go through the indexes real quick?
I'm done with the indexes.
Yeah. Crude oil on the same basic themes. Obviously, it's dependent on the economy reopening, global economic themes market. You would expect it to be up big here today in a risk-on environment. It still is in its range, though. You know, what are we up 6, 7, 8% now? Right now, as of this print, so we're seeing a huge movement, but it's now stuck in the middle of this longer-term range. Mark, what's your read on crude oil? Any opportunity here?
It's the same thing, same analysis that you have. Crude oil is tied with Cheesecake Factory and Cinemark and Boeing and COVID dependent. And once again, I mean, and not to be like all glum, but like these type of moves aren't technically healthy. They're very prone to shakeout reversals that happen on the slightest bit, right? Now, imagine you're a short, right? Or imagine you're something like that. I mean, you've been covering all day, right? And been like trying to do risk management and all that. These type of days are not indicative of what a trend might be. And like, it 2020 has been one for the record books from a technical analysis standpoint. The amount of wild swing days, I mean, they're great for day traders. Day traders have a field day people trading the overnight action on crude oil having a field day. But with crude oil or whatever it may be, until you have a genuine fundamental story that you can point to, and I don't believe a vaccine in the summer of 2021 is a genuine sentiment story for crude. I think that gets lost in the shuffle very soon.
I think you're going to have a revision on a lot of these major moves we're seeing in the commodity and the currency market, guys. I think the stock market wants to buy. It's just you went up a little too fast in one day, and you're seeing a little profit taking there. But I do believe the mentality in the stock market wants to buy. But remember, on these days where you have the vaccine, and I do think these days are a little bit more positive for crude than some of the other days we've had in recent history, because crude is very, very economic based. It's economic analysis based. It's growth based, contraction based. And so I do think if you're a longer term bull on crude, and I am not, I'm a long term bear on crude. But if you are a longer term bull on crude, I think you got to look at crude today and say, yeah, this can reverse and snap back to the mean. But even if it does that, you're still kissing off the 200-day moving average. And, the positive economic reopening up themes that are going to be embraced over the course of the next, couple weeks, couple months is probably going to be bullish for crude in that environment. But one of the reasons I feel like some of these commodities are going to have a little bit of a snapback to reality here is a little bit of what's happening on gold here today. Gold yesterday and the day before breaking out of that, trend line, we called it confirmation. And I still think it's confirmation here again, guys. This sizable movement in gold, this is all based on what's happening in the stock market. It has nothing based on what's happening in the actual commodity market or the currency market. And the dollar sitting at support, obviously got a little bit of reprieve from support that, threw a little bit of cold water on the gold analysis. But to me, I mean, when you're looking at gold here and you look at this on that 5-minute chart, where does that start? 430. Nothing was transpiring despite the market going up on the overnight action. Gold was just sitting there neutral, just holding its ranges. That vaccine news came out. Gold got absolutely obliterated in the short term. And remember, guys, whenever you have those singular moments of risk on in the financial markets, you typically have that risk off in the commodity market, especially gold, silver, platinum, palladium, and so on and so forth. I think, and again, this is just I'm speculating here, but Mark, I do agree with what you're talking about. I don't see this as I see this as stabilizing in the very short term. What do you think?
No, once again, it's been a while since we've had a vaccine day, but you got to understand how the algos work on these days. Back when we had vaccine days, gold sold off. When you had reopening rumors, there is a pattern that these things are traded, which is why Zoom was down huge, Peloton down huge, gold down huge, Bitcoin down, Cinemark, Kohl's, MGM, Boeing up. It is a pattern, and it's just an exacerbated pattern today. One of the things to realize that as soon as these big algo days happen, things start to separate from one another, and they don't trade all together. My goodness gracious, AMC is up 62% today.
Yeah.
AMC might be bankrupt in 2 months.
They were up 100%.
This is how I think a lot of people are approaching the market today, especially people that do embrace the gold within a portfolio. They're looking at their stocks and like, it's an awesome. I love that. They're looking at gold and be like, awesome. I don't care.
Yeah, that's exactly my perspective.
I think that's how they're approaching it.
I had the exact thought here this morning, Matt. I looked at my equities, and by the way, not all my equities are doing well. I own like Zoom, and I own some of the ones that were like the lockdown plays that are now down here today, but I don't really care. I love the movement in equities today. Gold is like, okay. So it didn't confirm the technical pattern that was developing so beautifully. We were looking at it. It was so sexy starting, but Okay.
No, it confirmed. We called it confirmed. That you can't change that. I called it confirmed.
Right.
It's
Didn't carry
confirmed.
through, I should say.
It just
But
didn't. But the analysis doesn't change for me based on one down day when the market is skyrocketing today, where the market is in celebratory move, where in the world's in. Guys, you're talking about gold, which is the #1 hedge against craziness out there. Well, when the world's celebrating over a 24-hour period, you're going to have gold go down in that environment. My point is, I do think you're having some legit movement in the stock market right now, but I do not believe this is a legit downward movement in gold that is going to see some carry through. Yeah, you could see 1800, but I'm going to tell you right now, if you can't buy gold at the 200-day moving average, you should not invest. Like, you just shouldn't. So
there's two levels on that for me right now, Matt. There's the support that we're testing right now. Then there's that 200 rising, which is going to come in around that 1800 in the short term. Is there anything else I'm missing there? I mean, that's the support I'm watching. And then if it does not find support here, I'm looking at that 200. So
no, again, I always approach gold longer term. I don't think you should ever look at how much money you're making on gold on a daily basis or how much money you lost on gold on a daily basis. I think you got to be, I've talked to Mark about this, in private conversations recently, and I've been like, Mark, your analysis on gold has to start with where do you think it is in 2025? Where do you think it is in 2030?
The first thing, and this, honest to God, this is what I did today. I woke up, I saw the epicenter stocks, and I said several swear words because I was like, all my puts are going to expire worth, because I've been like, I'm going to make a ton on epicenter. Instead, I'm only going to make a little bit. I'm going to get called out.
For a trader like you, Mark, there is not a better day than today.
I mean, it cleared everything out. Like,
Yeah.
So all of a sudden, the amount of margin I will have on the November contracts available.
You're resetting your portfolio today.
Basically reset my portfolio. Yeah. Everything on Cinemark is going to either get called out or expire worthless. Everything on Carnival, everything. I mean, Morgan Stanley, my dear Morgan Stanley, I'm not going to get put in. I mean, I got like just everything. Oh. And then I was like, all right, that's done. I bet you I get another chance to revisit those lows or there and do this on epicenter. I was like, that's going to happen. This stuff's not going to skyrocket. And I immediately started scratching on a notepad, instituting a cost average down plan on gold. Yeah. Because I was like, if gold tanks, the Fed is not going to do anything. I mean, I think the chances of stimulus, I'm very sour on stimulus in my analysis over the weekend, which is not necessarily good for stocks, which likely, I mean, this is going to still take a while. The Fed's still going to be there. If they institute QE, that big red candle reverses real quick. Now so on gold, I spent most of my morning analyzing gold. It's like, all right, it's been a while since I might have had a chance to cost average down trading plan on gold. And that's what I'm looking at, because I still believe the Fed ain't gonna, I mean, what the heck? Come on.
So existing gold. You're looking at this as saying, we could go down further from here. And I certainly agree with that. I mean, red candles have a tendency to continue until they don't. And that I'm going to have that philosophy until I see it on the chart. So you're not going to see this type of velocity, obviously. Yeah. I mean,
I'm switching from the one thing today did is, I think, absent a specific QE need, I think you switch from price appreciation gold back to cash flow. Because we had a technical signal, you had the environment, and then you had bad luck with the virus news. I think you switch back to cash flow.
Again, I want to be clear. You had some bad luck on gold with the virus news, but we should all be celebrating that virus.
No, just from a timing standpoint, because that thing was set up, the sentiment was set up, the technical thing was set up, the price action was holding, like you pointed on the chart, and then vaccine news and the algos went ham. And so I look at situations like this as an opportunity. Listen, when something is down that I have a long-term belief in, it's the whole Cinemark thing. Like, it is like when things going down and I'm like, Cinemark's going to survive this. And if it goes to $5, I'm going to buy even more. And if it goes to $4, I'm going to load up the truck, and now that's all cleared out. And now I go find things that I believe in, and I believe in gold long-term. And if gold drops lower, I'm happy to lose money on the existing shares or the existing options I have and institute a cost average down plan. I think it's an easy call. But for existing shares, I do think you switch from price appreciation back to cash flow. I think that's the right call here, knowing what we have today.
I agree in the short term. I do. The technical setup we saw before this 4-hour move to the downside was really, really good. And I'm not going to overreact to gold simply because it's a risk on day in the marketplace. These things can reverse fairly quickly. I'm looking at gold from a technical perspective at this point, and I'm saying, okay, this sell-off we had was massive, no doubt. You look at this over the last few hours, let's drop it down into a 15-minute chart, sell, 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 sell. Now, as you approach that 1850 barrier right here, you start to see that momentum start to slow down. Now, this is not a reversal. This is not a reversal pattern yet, but you always see slowing momentum in potential reversal patterns. You come back out to that 4-hour chart, and you can kind of see why. Well, why? That major resistance right there at 1850. So let's see on this risk on day in the market and a massive sell, obviously, with down 5% on gold so far. Let's see how gold handles 1850. Right. I think that's the first kind of step in the analysis. Let's see how that 1850 handled it. I could see slowing momentum right there. It certainly could lead into a reversal pattern at that point. And you may be looking at some investors out there saying, listen, y'all are crazy and you're giving me gold at 5% down in an environment where Biden is going to be the president, where the Democrats are going to control the House, where you're still most likely going to get some degree of quantitative easing, where you're still going to most likely get some degree of stimulus, where central banks around the world are still in dub mentality. Well, wake me on any bearish analysis when central banks capitulate on quantitative easing.
Mm-hmm.
Until that happens,
Until
I think until that happens, and it certainly could, but until that happens, I'm going to be looking at these dips as potential buying opportunities. And the first one I think does start with, are we buying the dip on gold at 1850? I think let's wait to see that from an intraday perspective. Let's see support form. Let's see it form on the daily chart as well. 1800 is that battle in the sand, though. That battle at 1800, if it does happen, I'll tell you, tackle trading, they're going to be buyers at 1800 on gold if it ever happens.
Yeah, I will be myself. And Mark, on a day like today, obviously talking about technical confirmation on the intraday, things like that, you love down days. You're exactly the type of investor where if you get a 5% clip on a product that you're interested in long term, those are the days you get most excited in many different ways. Do you do naked puts without technical confirmation on a day like today?
Oh yeah, no, it's like on Cinemark and I mean, this market in 2020, I've separated it into like these baskets, right? Like epicenter stocks, stay-at-home stock, tech stocks, value stocks, commodities, gold, and so like, and I have a different thesis for each one, and when things start going south, I do a fundamental check. I don't do things blindly. I base it on a fundamental thesis. And I put myself in a position ideally that I'm not selling 10 naked puts on Cinemark at 1250. I'm selling one. And then if it drops to 10, I sell a couple more so that if it really drops, I can really pound it. And I'm excited to lose a little bit of money at 12, knowing that at 5 or at 7, I love it. And so that's what I start to do on something like gold. I do a fundamental check. Has anything changed? Not a dang thing has changed today. The only thing that changed is price. And when the only thing that's changed is price, then I start being like, all right, do my math, take a little bit of ownership. And if it drops even further, I'm excited to pound it more. And if it drops even further, then I start getting really excited. And so I've started to institute it in the gold. Once again, tickling it, not going all in. Not being like, oh yeah, that's where traders make the mistake, is like, I'm going to put myself in a position that if gold dropped another 10%, they panic. If gold drops another 10%, you should be excited. That's how I approach these situations on something I believe. And you're probably looking at some downward pressure here. You're probably looking at some downward pressure in gold in the short term. And so
Having a true fundamental conviction is so important in
it
investing.
It makes it a lot easier, doesn't
it
it?
is the difference
So
between
important.
the adults and the children in investing. And I really believe that. I'm stealing that from Tyler Craig a little bit. He uses the, scare the children off phrase that I find cute when he says it, because he does it so he delivers it really well.
Mhm.
Yeah, he
But
does in the good dad over Halloween scare the kids.
I
Like,
mean, and so it's
I was
like
just
on,
a good dude.
and so it's like on Carnival or MGM or Cinemark and some of these things. For me, the fundamental conviction is: are these companies going to survive? Do they have enough money? On all three cases, it's like they got plenty of money. They got money into 2022. So COVID would have to be this epic whatever disaster. But the higher it goes in price, I get less value, right? So I want to take a good calculated bet. And with gold, I'm sorry, if gold were to drop to 1,300, I want to have the margin, and I lose money on my short-term stuff, right? But man, I start pounding. It's just because I believe in gold. I believe central banks are never going to return to any sense of normalcy. I think there will be countless events between now and 2025 that will help prop up where you'll have these reverse days where things are just good. Having fundamental conviction makes the world a difference, and either you have it or you don't.
Speaking of fundamental conviction on a product, I have it on Bitcoin. It's actually been holding up here a little bit. Let's do a quick peek at this one, Matt. Then I want to get into individual stock analysis, and we're just working our way through our routine as we always do here on a Monday. Appreciate the comments in the chat. Love the conversation as always that's happening out there. Hashtag Team Tackle on that. Matt, we've now been about 5 days in a row where Bitcoin took off, hit this blast out top 16K, and we haven't really sold off. It's holding up here very nicely. And now on a daily perspective, we got a little red candle. How are you reading this chart? Just waiting for a pullback? Are you approaching it from that perspective? What's your read on the chart?
The read on the chart, I said last week, in fact, I talked about this in detail on during Friday's halftime report. I expect a major battle to happen in Bitcoin as you approach that 16,000 barrier. And, this morning when I woke up, and I went to bed fairly late last night, I woke up fairly early. But this morning when I woke up and, I saw the headlines, right? I mean, Pfizer, I saw the headlines because I wasn't up when Pfizer had those headlines, but I saw the headlines when I woke up, and, I'm thinking, oh, market skyrocketing. Before I even came to the charts, I was expecting to see what we saw in gold today. I didn't know how much it was down when I looked at the chart, but I was expecting that. I mean, when you have, risk on days like today, and it's like small cap up, industrials up, energy up, you have those true economic plays up in price fairly aggressively. You knew this was going to happen. And so I was like, honestly, I had one of those moments where you're coming to the chart and you're like, okay, how bad is that chart, right? Is it blasting all support levels? And, honestly, I looked at the gold chart first and I was like, all right. I thought it could be worse. It's not as bad as I thought. That's kind of the emotion I had, because I'd already prepared. Once I saw the market headlines, I was prepared for gold going down like it did. And I felt right after gold, the second thing I thought about was, what about Bitcoin? If gold's down this big, Bitcoin's getting slaughtered. And, Bitcoin was down 4 or 5% at the time, very, very similar to gold. And I'm like, why?
Mm-hmm.
Why is Bitcoin not getting crushed?
Man, you and I and maybe we've just been doing so many shows together this year that we just have developed these joint freaking minds, because that is to the word exactly. Because you expected Bitcoin to get crushed if this scenario played out.
Mm-hmm.
You didn't.
You didn't. And so, Mark, when I looked at the Bitcoin chart, because I was expecting at least 9 EMA, maybe even lower than 14,000.
Oh no, I expected a bloodbath.
Yeah, and I when I saw that, it literally took me a second. Like, I stopped, even because I don't shut down my brain ever when it comes to analyzing. Like, I'm always taking in data, and I looked and I just shut it down for a second. I was like, I thought it was going to be a lot worse than this, and that immediately went to, I'm extremely impressed that Bitcoin held up in the face of the volatility in the commodity market. And so, risk on asset like this, I was expecting worse, and when I didn't see worse, I was like, wow, Bitcoin's defensive nature could be legit here. And it honestly got me more excited for that next potential trigger at 16,000, quite frankly. I still think there's a retracement analysis here that could be gobbled up aggressively, in that buy zone between the rising 20 and the 9. Let's see how it handles the momentum of the 9 retracement, right? Those are more flag bases or high base patterns that when the 9 EMA is really involved. You saw it here. 9 EMA got involved, quick price action, consolidation, 9 EMA, bounce run, quick run, consolidation, let that 9 EMA. That 9 EMA to me is that momentum indicator. Can Bitcoin maintain the momentum? And then, the secondary analysis is, okay, if we don't maintain that momentum, do we see some degree of, and that momentum pattern would be a flag base pattern or a high base type pattern. Can we see a traditional retracement? I'm not sure we're going to see a traditional retracement here. Let's see how the 9 handles. Let's see how the market performs between 15 and 16. And ultimately, let's see if that breakout of 16 can ultimately form. And that breakout of 16, we were positive on the breakout of 12. We were positive on the breakout of 11. We were buying above the positive breakout of 14. But that $16,000 breakout to me is that one where everybody should know that one. Like it's going to be a battle. Let's let it play out. But that $16,000 breakout is the one I'm looking at and saying, okay, can we see momentum on the 9 on the daily chart, and can that put pressure on that $16,000 breakout to where you're talking 20,000 at that point? And I think that's kind of how I saw it today. I was a little surprised we didn't see a little bit more downward movement in price. And because we didn't see a little bit more downward movement in price, that gave me a little bit of, Bitcoin's playing defense here far more than gold. And right now, I mean, at a very minimum, you got to be very impressed with the defensive nature of Bitcoin today.
Mm-hmm. Yeah, and even like on an hourly chart, you're seeing that $16,000 level start to develop as a resistance zone. And obviously, we've got the one red candle on a daily, but Bitcoin trades over the weekend, guys. Bitcoin traders have been watching that price for 4 days now, rattle between 15 and 16, very defensive at 16. I was impressed as well, guys. And what you said earlier about fundamental conviction, it's nice to have it, and I still do have it here on Bitcoin, obviously. Let's talk some companies here if we can here today. Maddie, there's a couple companies in the earnings roundup, and I believe we have some major names here out of Berkshire and McDonald's. Let's start with those two. McDonald's maybe first, or Berkshire, either one. I don't really care. Which
let's
one?
With BRK.B here for a second. Or let's go BRK/B. Okay. Berkshire here today obviously reported earnings on Saturday, and their earnings report was fairly impressive. I mean, analyzing Berkshire report, you're not analyzing like you analyze a high flying growth stock. I mean, Berkshire's chock full of, industrial plays, banking plays, institutional plays, insurance plays, obviously full of infrastructure type stocks as well. So you're really looking at Berkshire as more of obviously, I think a value type analysis than you would as a growth type of analysis. And Berkshire, I think you look at their earnings report and you say, okay, that was really, really, really good, in terms of, meeting the expectation. They beat on EPS numbers. But I think what is telling for Berkshire, and I think what the question a lot of us have, specifically in those distressed areas of the market, airlines, infrastructure, banks, cruise lines, and a lot of what makes, outside of Apple stock, a lot of what makes Berkshire is just that. I think the question I have over Berkshire's report, Tim and Mark, is more indicative of that value play than the growth play. But Buffett bought aggressively his stock in the quarter, guys. Yeah. He's bought $16 billion worth of Berkshire in the last 9 months, in the last 3 quarters. Last quarter, that was $9 billion worth of stock buybacks last quarter. Is Buffett seeing something right now over and not just today, obviously, because that $9 billion worth of stock is over the course of the last 3 months. But is Buffett starting to buy into the economy reopening up theme, the distressed areas of the market theme? Is Buffett buying aggressively his own stock the indication that Buffett thinks the worst is over?
I was thinking about this morning. I saw some of those numbers as well. I mean, the $9 billion on the quarter, Matt, actually represents a bigger purchase than almost any of the big acquisitions we've been talking about with Berkshire for some time. And if you think about the actions that Warren Buffett has taken throughout this year, he's had quite an interesting 2020, like all of we have. He missed out on some of the early reopening. He dumped the airlines. He was in the news a lot. Then he came back and he hit a lot of big winners on certain stocks, got into that gold stock that we were talking about, the Barrick Gold play there for a bit. I don't necessarily think it does mean Buffett believes in the economy, by the way, because the four biggest companies he still holds are Apple, Bank of America, Coca-Cola, and American Express. Now, is he buying new things? Because I think these reports were as of end of Q2, so the end of September. I would love to see what he's doing right now. How is he approaching a day like today? I'm not reading all of it into it as to what it means from his perspective till I hear from him and see what his actions are today. But I think it does say a lot about the way he's approaching cash this year, Matt. Where does he go? He goes into his own stock, buys it back. He continues to hold Apple Computer stock he believes in, all that kind of stuff. I mean, Matt, what was your read
Well,
on this?
he's been very conservative this year, though,
Yeah,
Tim.
yeah.
I mean, he's been extremely conservative this year. There was guys, I know. I mean, we have a memory that lasts like a teenager in the market these days. But if you guys remember, 6 months ago, he was heavily criticized.
Yeah.
When the markets were recovering and everything was going up, 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 up like gangbusters. And here's Buffett sitting on the sideline, and everybody, not us, because we don't criticize Buffett, but I heard a lot of people out there in the Twitterverse and Wall Street heavily criticizing Buffett about being, sitting on the sidelines, being patient, not supporting that economy reopening up. That was in the same type of time frame where Buffett, historically reversed his opinion on gold with his investment into gold. So, or the gold miners. But I mean, when you look at Buffett here today, and you're saying, yeah, Tim, I would love to sit there and have Buffett on the halftime show and ask him, what specifically are you buying today? But that's not how Buffett behaves.
Mhm.
I think you got to read the tea leaves a little bit. And in the first 6 months of the year, here's Buffett purchasing about $7 billion worth of his own stock. But in the last quarter, he's aggressively up that to $9 billion in the last quarter. I think Buffett is showing you that he does believe a little bit in the economy opening up, that it's the everything we've talked about on these themes developing in the market. And so I do think Buffett is showing his hand a little bit, saying, I'm willing to take on a little bit more risk in my own portfolio, increasing that by $9 billion in stock buybacks over the last quarter. I think you got to see that as positive. And, where Buffett invests, finance, banks, institutions, infrastructure plays, those economic value plays. I think that is telling a little bit, and it certainly would add to that economy opening up. It certainly would add to the argument of value versus growth, and does value have a way to come back here? And so Berkshire sitting here, gap up, run after the gap up, and you're looking at that breakout, fairly significant breakout. If you can close above 220, you should see 230 in the short term. And then let's see how Berkshire handles that 230 by 231 conversation. But I do think this is indicative of value coming back to life just a little bit.
Mark, how are you reading into this Berkshire report here today?
Anytime a company buys back its own stock, that is a sign of internal confidence or internal hubris. When you watch the airlines buy back their own stock over the course of the last 8 years, especially with their financial situation, it was hubris. When you saw a lot of companies do that, it was hubris, financial engineering. Warren Buffett's not about that. Warren Buffett's about returning value. I think it's a signal on Buffett, what he sees moving forward. So, listen, I'll trust Warren Buffett as long as that man is on this planet. So I will trust him. and trust his eyes and trust his evaluation. And I think it's a sign of strength.
I'll trust him when his brain is frozen in cryo freeze over the next 200 years.
Future Rama style, right? You know, Warren Buffett in the little glass jar.
Yeah.
Next to, the old Nixon on those Futurama episodes. That was pretty funny, concept. Next one.
Another, what you would consider a value stock is McDonald's here. McDonald's announces $2.22 a share versus expectation of $1.93. Revenue came in line at 5.4 versus 5.4 billion, 0.02% decline in revenue. I think the big news out of McDonald's here today is the meat-free burger they're going to test in 2021, which is why Beyond Meat's down aggressively today. But par for the course with McDonald's earnings. I didn't see anything too exciting, nothing. Blah.
Yeah, a couple of announcements there, obviously, with some of their products. Matt grabbed some attention and splashed some headlines with the meatless burger. They're calling it the McPlant. And if you remember, they did a test with Beyond Meat in Canada earlier in the year. That's why Beyond Meat's taking it down a little bit. McDonald's decided to go with their own product here, obviously, which I think they
literally are calling it the McPlant.
The McPlant.
I want a short McDonald's.
Wait, they're calling the Beyond Meat burger the McPlant?
Their version of a meat-free burger is called the McPlant. Yep. You don't like that, guys? Is that?
And I'm a big McDonald's guy, right? I mean, here's my McDonald's Coke. Here's my McDonald's coffee. Like, I love McDonald's.
So stupid.
But come on, that's all you could come up with?
That's so dumb. How much are their marketers paid for?
Listen, I cook about 50% vegan meals in my house, so I am a huge plant-based proponent. Matt, your wife is vegan.
I'm 99% plant-based in my household.
I do not want to eat the McPlant. That doesn't make me like salivate. I don't want to eat the McPlant.
No, I don't want to eat the McPlant. What are you talking, McDonald's?
Well, that's terrible.
They also announced, if you don't want the McPlant, by the way, maybe you'll get one of their fried chicken sandwiches. You remember they did the test in Texas and Oklahoma this year as well. They said it was successful enough. They're going to make it a national thing. If you think back, guys, those fried chicken sandwiches were a huge deal there, like for Popeyes and whatnot, for huge social media trend for a bit. That might be a product that turns some profit for them here a little bit. Matt, the market's doing nothing on any of this information and news. I mean, the stock is kind of stuck.
I don't know. I don't even want to eat the fried chicken sandwich, which sounds delicious just because how dumb the McPlant sounds.
I don't want to eat anything. I'm done. Like, I'm going to go on a 3-day fast just to protest
literally
that nonsense.
Maybe that's like the whole wing of what they're building, and maybe they'll have unique little names for all the different products. I don't know.
This is we got to mark a great podcast game would be dumb marketing ideas. This one would be up there.
The McPlant right up there at the
top. In fact,
top.
I will try to, for the game today in the podcast, we release the podcast
worst
later
marketing campaigns.
I will see what I can do to come up with a list of the worst marketing campaigns ever.
Oh, McDonald's. McDonald's. So bad. So bad. Whoever was the individual who brought that idea to the table, you should fire them. And whoever approved the name of that, they should be fired as well. They should be part of the lack of V-shaped recovery in the labor market. That is absolutely ridiculous. I can't believe people are paid to come up with that degree of nonsense.
No, and Cody just missed it. He must not be able to talk, but
I'm here.
Cody?
I'm here. Yeah, Mark won't eat the McPlant, but the McRib is awesome.
Yeah, because the McRib is a great name. Whether the McRib is terrible or not, the McRib is a great name.
Okay, but the McPlant might be closer to meat than the McRib is.
I agree with that, Cody. That's well done. I agree with that. But yeah, it's so bad that I can't even think about whether or not McDonald's is a good investment after their earnings report. It's that bad. I got to think about something else. Let's move on to something that would possibly make me want to eat the McPlant there, and that is Canopy Growth here. Look at that transition there, buddy.
Mm-hmm.
Canopy Growth reports earnings here today, and the reason I wanted to bring it up is the weed stocks, the cannabis movement. Is it having a little bit of a comeback here? I want to get your opinion here. but they came in very positive at 16 cents a share versus expectation of negative 23 cents. Revenue came in line above expectations at 113 million versus 87.6. Revenue increase, guys, 74.5% in year-over-year growth for the Canadian dispensary company here. The only question I have for you guys is there, I mean, we've been around the market for a long time, but even people who haven't do remember the 2017, 2018 metric rise in the marijuana stocks. And if you guys remember the great rotation of all things crypto related in 18 into the weed stocks in 18, just absolutely just massive rises there. Guys, post-election analysis, I mean, there's a lot of people that believe that a Biden administration would look to decriminalize cannabis in America from a federal perspective. And there is differences between federal legalization, obviously, and decriminalization. But you also had multiple states in the union last week authorize recreational use of marijuana. You had certain states like Oregon just go full, just do what libertarian, just do whatever you want. We're decriminalizing everything. Guys, in the last week, you're seeing, not the last week, but you're really seeing, these stocks like Canopy Growth, Tilray. Let's look at Tilray here. Got to kind of hover in here. Tilray in the last few weeks have saw some really good price appreciation.
Chronos, yeah.
Right, Chronos, which is one of those popular ones we really liked, saw really good price appreciation off that very significant support level of $5. And then obviously you have Mary Jane here, which is MJ, which is the ETF, and you're looking at a double bottom, double type scenario between $10 and $15. Mark, you love depressed areas of the market. Is this an area of the market in the last week, now that we're starting to see a little bit of what's going to happen post-election here, is this an area of the market that you have some interest in?
Yeah, in the last several months, actually, as marijuana's been depressed, I've sold some naked puts. I've taken ownership a little bit here and there. Like, when I look at like portfolio allocation, I love cost average down plans when things get cheap. Now, once it's made the move, I'm usually like out. I make money on my naked puts. But if marijuana comes down, like I have a certain amount of money I'm willing to lose, and I have a cost average down plan that, like, I'll add 100 shares at 10, I'll add 100 shares at 750, 200 at $5, and I have that plan set forth. And so I'll sell naked puts in this situation with that plan. Now, am I going to chase it? No, but I'm not a chaser, right? But I think you could, just like Cinemark, just like MGM, treat it the same, even though it's entirely different catalyst moving it. And wait for technical formations, because the one thing we do know, when a area of the market that's been depressed stabilizes, there can be some really good trades to the upside. So from an investing point of view, I have a cost average down plan. From a trading point of view, I definitely think you just got to wait for the formation. You got to be patient. If you blindly chase it, then you're gambling. But I would put a marijuana company or two, wait for the setup, and because the moves can just be too explosive, so you can't ignore it. But wait for the setups on trading. I have a cost average down plan on investing. That's what that's my 2 cents on the whole thing.
And MJ might be the best way to play this here, Matt. One of the hard things I'm having with this whole movement, because obviously you've seen a sentiment shift the last week, no question about it. Since the election, all these states coming out with, all their propositions they passed. We've seen movement into the marijuana stocks for a week in a row now. But if you look at a couple of stocks, look at ACB, for example, so there's still, I have a little bit of caution still here. And I understand, this movement towards it. But Aurora Cannabis, I mean, they're a poorly run financial company that's gotten a little bit of a pop here, but they've been in trouble. They had a pop in May as well. And then the stock went into like a 4-month downtrend. Now, could this create something just from an overall movement perspective? Potentially, yeah. But we've seen this before. I mean, Tilray, I still have very much caution in. Like a Chronos, I'm more interested in, right? So in my opinion, I think it's time for research. I don't think you rush into this right now. I think you have to map out because we're seeing the themes. Sure. We're seeing the broad-based ideas. Sure. And clearly something is developing here. But I think it'd be a little bit foolhardy just to rush after them personally.
Yeah, I don't think you chase here, but I do think it's on your radar though. Like, I don't think it's the right time. I think you wait for a better technical setup here, but I do think it's something that people should keep on their watch list. And whether it's MJ, the ETF, or pick the one you believe in the most, whether it's Kronos or Canopy or Aurora or Tilray. I pick the one. I obviously have my leaning on from a fundamental perspective, but I for the first time in two and a half years, I feel like I feel an internal need to break down these fundamentally.
Mm-hmm.
And I have not had that desire to even look at this space outside of just some, buy the dip after massive crashes type philosophy, right? But outside that, I've had zero interest in this since really kind of 18. So, I do feel the need to go out there and do a little research, but I do think we're premature on it. But you could definitely see some bullish themes developing here. You can definitely see it.
Mm-hmm. Absolutely. Absolutely. And then just one last news item from me, Matt, was Biogen. Just a reminder here with some of these drug stocks. And this is one of the biggest. BIIB had that big pop last week. They're down a little bit here today as the FDA basically says that their experimental drug for Alzheimer's was in fact ineffective, not effective. There's still a lot of discussion around this thing, but man, what a crazy 3 days.
Kind of a little bit. You got to look a little hard.
Oh, it's down there. No, I saw it down like 30%. Yeah.
Yeah, they're down quite a bit. And this is why a lot of traders like to stay away from these types of pharmaceutical companies. Just we've seen it a lot. We've seen it a lot. Nothing. I'm not shocked by anything I'm seeing in Biogen.
No, I'm not shocked by the Biogen news either, but that's the nature of it. It's a good fundamental company, but just when you're sensitive to FDA approvals, especially on specific drugs like this, you got to know your companies. You just have to know your companies.
And Tim, this is a pharmaceutical company that's actually very well ran, a fundamentally really good company, and it still has look at this. This was Alzheimer's. This was Alzheimer's. That's what this was.
And then gap
this
right back
conversation
down.
Has been going on, and it's at the exact same price point today that you are when the drug got, basically blasted back last year. So some better traders, better than me, they trade Biogen. I don't.
Yeah, it's not on my radar either. And back on the broad markets, just as we kind of wrap up here, Matt, that's from a news perspective. That's what I got here today. Obviously, we're going to be tracking the major themes that are developing throughout the week. Still a lot of open and unanswered questions, including how are we going to react through this technical breakout on this one-day gap and what's going to happen. Maddie, final thoughts from you for our team out there.
No, we got a major week coming at us this week. Obviously, stay with us every single day as we break down the major news in the market. Earnings season is quickly getting in the rear view mirror here, but we still have, we talked about, McDonald's and Berkshire here today, but Disney, Applied Materials, DH Horton, can that show a little bit about what we saw in some of the other housing stocks last week? So you do have some fairly significant ones, but we are on the back end of earnings, and earnings so far have been really positive. Remember, I mean, coming into this election, that's all anybody was talking about, but earnings before the election were positive. We've had positivity coming out of earnings, after the election as well. And so you're starting to see these themes develop in the market. And I feel like, Tackle was very good and very early in adapting those themes last week in the market. We were talking it literally on Wednesday last week, and the rest of the market was talking about what we were talking about on Friday of last week. So I feel like we were pretty quick on those themes developing, and those themes are going to be developing ongoing over the next, over this week as well, as we start getting into, what a Biden presidency represents to the marketplace. And so far, so good. It's been a fairly decent last few trading days. Obviously, the gap up today blew up some technical patterns. You got to wait for those to be reestablished. I don't think we're in that. I feel confident swing trading mode yet. I don't feel like we're there yet from a swing trading perspective. But like I said last week, there's no reason to have insurance on the market right now as these themes are being adopted. So, stick with us as we break down the action all week long. And then, the rest of us are going to get another edition of the podcast coming out later on today. So definitely, and we're going to review some of our predictions from last week, see who was the most accurate on the prediction podcast last week. So we'll review some of those predictions from last week as well.
Marky, final thoughts from you?
Listen, we know what's going on today, just from an algorithmic standpoint, just like we knew what was going on early this year. My best guess moving forward is that just like in May and June and early July, when we saw this algorithmic virus news, stay-at-home news, COVID news, whatever else news, it had a cumulative effect of lifting everything up. So epicenter stocks would be up big, right? And then 3 days later, there would be COVID news and they would be down. But then stay at home would lift and gold would lift and tech would lift. And it just had this cumulative effect of this one area gets a big bump and then the other area sells off, but it never sells off as much as it went up. And so I think we are heading into the next couple months of this cumulatively lifting everything, although it's in this weird rotation, algorithmic, exacerbated day-to-day news. And also in these technical formations, like whenever you've had a lift off of this in the short term, there's always that shakeout pullback day. Long story short, I really like where the market's heading, but I'm not going to like the smoothness of the ride. It's going to be choppy here, choppy there, and this weird lifting up probably by the end of the year of everything. It's just going to be a wild ride in how it gets there. So I think for me personally, when I get a chance to take big profits in an area, I'm going to, and then I'm going to look for discounts in other places and just do that back and forth. I mean, we got a really good playbook earlier this year that's how the market responds. And so don't be afraid to make money, and don't be afraid to take deep discount on a stock if it gets really cheap relative to where it was in the coming weeks.
Love it. And I appreciate both of you guys really setting, the messaging for our team out there and kind of explaining what's going on out there from a theme perspective. I think you guys have been all over it the last week and a half, and we're going to continue that on a day-by-day basis, especially as these things kind of unfold. There are some unknowns in front of us, including COVID continuing, like you guys talked about. Great news for humanity here today. But guys, I even heard it from health experts quite a bit. There's a light at the end of the tunnel with vaccine data like that. But we still got to go through that tunnel, and what Utah did today, I think, is a reminder. And, just out there, be safe, be cautious, identify what's happening out there, but keep moving forward. Guys, that is our show for a Monday morning. Appreciate everybody who's here. And if you have not done it yet, click the subscribe button, click the bell, come back and join us. We do this every day that the markets are live, 12:30 p.m. Eastern Standard Time. If your team tackle, go through the weekend reports, go and see the messages that Coach Tyler and Coach Noah, kind of explained in the stock and the options report. I thought they did a great job with that over the weekend. Mark is always on the commodity. Spend your time preparing for the week, and we'll be back tomorrow, Tuesday, same time. Guys, we're out.